Okay, so get this. Imagine a company growing over 100% in a single year, but at the same time, it's losing thousands of crores. I mean, that is the wild story of Zepto, and they're about to go public. So in this explainer, we're going to break down exactly how that's even possible and what it all means for the future of 10-minute delivery.
First things first, let's just talk about the money. Zepto is looking to raise a massive 11,000 crore rupees in its IPO. And to be clear, that's not just a big number, it's a huge statement of intent. It's the kind of figure that makes everyone sit up and pay attention. And look, this isn't just some rumor mill stuff. By filing their papers on December 26th, Zepto is basically firing the starting gun. It's a crystal clear signal to the market that they think they're ready for the big leagues, and they're not messing around.
So you've got to be asking, right? What in the world is driving this huge valuation and all this hype? Well, to really wrap our heads around it, we've got to look at both sides of the coin. So let's start with the good stuff, the incredible growth that has investors so excited. Just look at this chart. This isn't just growth, okay? This is what you call hyper growth. Their turnover absolutely skyrocketed by 129% in 1 year to nearly 10,000 crore. I mean, that's the kind of explosive expansion that makes venture capitalists just throw money at you. And all that growth, well, it leads to this number right here, a staggering $7 billion valuation after their latest round of funding. That's billion with a B. It just goes to show you how much the private money folks believe Zepto could totally own this entire quick commerce space.
Okay, and you knew there was a but coming, right? Growing this fast costs a ton of money. A ton. So now let's flip the coin over and look at the real and very steep price of all this expansion. And here it is, the catch. Well, all that revenue was flying in the front door, the losses were just piling up out the back. We're talking about a net loss of over 3,300 crore rupees. That's almost 3 times the loss from the year before. Ouch. So this slide really lays it all out, doesn't it? It's the classic startup dilemma. On one hand, you have this absolutely incredible growth, but on the other, you have this massive, frankly unsustainable cash burn to get there. And this tension, this is the whole story of their IPO. So now the big question is, how does this whole high growth, high loss model play out when it's under a totally new microscope? Because, Zepto isn't just talking to venture capitalists anymore. They're about to face the public markets. And that, my friends, is a whole different ballgame. And this is really the key, right? See, private VCs, they'll often bet on the moonshot, on pure growth and just grabbing as much market share as possible. But public investors, they're a different breed. They're a bit more skeptical. They're not just buying the dream. They want to see a clear, believable path to actually making money. Yeah, this quote from a market analyst just hits the nail on the head. For the public market, that crazy growth is just the price of admission. It gets you in the door. But it's not the main event anymore. Now the spotlight shifts. Now everyone wants to know, is the business itself actually healthy? So you keep hearing this term unit economics. What does it even mean? Well, it's actually pretty simple. Think about one single grocery delivery, just one. After you pay for the bananas and the bread and you pay the delivery person, did Zepto make a few rupees or did they lose a few rupees? That's it. It's about stripping everything else away and focusing on that single core transaction. And trust me, investors are going to be obsessed with this. This right here, this is basically the new report card for Zepto. Forget growth at all costs. The public market is going to be grading them on things like, are you making more money on each delivery than you were last year? And show us exactly how this whole thing actually becomes profitable as it gets bigger. And that really brings us to the bigger picture here. Because this IPO, it isn't just a massive test for Zepto. It's really a referendum on the entire quick commerce industry. The whole idea is kind of on trial. A lot is riding on this. This slide shows the fundamental shift that has to happen. For years, the game in this sector was just grow, grow, grow. Grab market share, worry about profits later. That was the VC-funded playbook. But now the game is different. The challenge is to prove that this can actually be a real, sustainable business for the long haul. So we end with this. It's the multi-billion-dollar question hanging over this entire IPO. Can quick commerce make that leap from a cash-burning land grab to a truly profitable business? Well, Zepto's performance on the stock market is going to be the first big public answer we get. And believe me, everyone, investors, competitors, and customers